Okay, we are working on PA2-3, calculating predetermined overhead rates, recording manufacturing costs, and analyzing overhead. And again, we're working in Chapter 2, which covers job costing. This is manufacturing accounting, and we are focusing on job cost accounting. So, Tyler Tooling Company uses a job order cost system with overhead applied to products on the basis of machine hours. So this is a little different in terms of overhead application. It's a little different from what we looked at in the earlier problem, where we applied overhead based on direct labor dollars. In this problem, this company applies overhead to production based on machine hours. For the upcoming year, the company estimated its total manufacturing overhead cost at $224,280. And so that's one of the procedures that companies in manufacturing go through, and that is to estimate total overhead for the year at the beginning of the year, because that estimate goes into the overhead application to production throughout the year. And it really doesn't matter whether it's job costing that's in use or process costing, which is a subject of Chapter 3. In manufacturing accounting, one of the steps that the company goes through is to estimate its overhead for the year. And of course, when you estimate an amount like that at the beginning of the year, your main point of reference is what has occurred over the past. So you're looking at history to come up with an estimate that you're going to use moving forward. And that's a basic concept in management accounting, especially when it comes to budgeting. And then this is another example of using history to move forward into the future. So anyway, the company estimates its total manufacturing overhead at $224,280, and it also estimates total machine hours at 62.3, and so the process for that would be essentially the same, looking at history to come up with an estimate to be used moving forward. During the first month of operations, the company worked on 3 jobs and recorded the following actual direct material costs, direct labor costs, and machine hours for each job. And so if we take a look at this schedule here, we can see that for job 101, 102, 103, the total direct materials used are the amounts shown, and the total for the 3. The total direct labor incurred for each of the 3 jobs are the amounts shown, and a total. And then total machine hours used for each of the 3 jobs are shown, again with a total. Finally, job 101 was completed and sold during the current period. Job 102 was completed but not sold. And finally, job 103 is still in process. And again, it probably helps if you think about the inventory accounts that are in use for manufacturing using job costing, where materials is initially accounted for as part of an inventory, and then materials are moved into production. So the cost of the materials used in production are taken out of the materials inventory and moved into work in process inventory. The cost of indirect materials is accounted for as a manufacturing cost, and so that amount is moved into the income statement account, manufacturing overhead. The labor cost is accounted for as payroll, essentially, and so that those amounts would be debited to work in process for direct labor and to manufacturing overhead for indirect labor. And finally, once labor and once materials used and labor incurred has been recorded in the work in process inventory account, that's where production is occurring. The last step would be to allocate or apply overhead to production, and what that entails is taking overhead cost out of the manufacturing overhead account and moving it into the work in process account. And again, if you think back to the first two problems that we worked on, that was basically the process we went through. Okay, so in this problem we're not using T accounts, and so it might be a little bit harder to get a visual on what's happening here. Let's see. Okay, so what I've done here is I'm just using a blank Excel worksheet to do some of our calculations. I've taken the information out of the problem first of all and shown it on the worksheet here. And so we can see direct material usage for each of the three jobs, and in total direct labor incurred for each of the three jobs, and in total. I have a space here for overhead applied, and machine hours used is also given, and machine hours is what this company uses as a basis for allocating overhead or applying overhead to production. And so the first step and the first requirement really is to calculate the predetermined overhead rate. And so the way we do that is using our estimates. And our estimates, again, are given in the problem. The company estimated total manufacturing overhead at 224,280. And so our estimated overhead for year put it here, 224,280, and our total estimate of machine hours for the year is 62.3. Estimated machine hours for year is 62.3, and so our overhead rate is taken or is calculated by taking our overhead and estimate of total overhead and dividing it by our estimate of total machine hours. And I forgot to show that as a formula. It looks like I used the wrong cell for the formula. It should be total estimated overhead in B10 divided by total estimated machine hours in B11, and I've got B13 up here, so we need to put 11 in there. And so our rate is if we change that, it's 3.6, but if we change it to a percentage, we'll see that it's 360%. So our predetermined overhead rate is 360% of machine hours. So we'll go ahead and put that in there. 3.6, and of course, as we always do, we want to check that we're okay, and we're okay. So our predetermined overhead rate is $3.60 per machine hour incurred for each, and that rate is used based on actual machine hours for each job. Okay. Requirement number 2, compute the total manufacturing overhead applied to work in process inventory account during the first month of operations. Well, we can do this in total, but it might be a good idea to also do it individually. And so the formula here would be to take total machine hours used actual and multiply it by our rate. And I think we should be able to, let's see, we need to make that a constant. And so we should be able to take that. Nope, it didn't work. What do we do wrong here? B7 times B12, and we want to make B12 a constant. And did we do that there? I think we did it now. Okay, so we can move that formula over and we should be okay. So it looks like our overhead applied per job and in total are these amounts. And again, the way we are calculating these amounts are to take the amount of the actual machine hours used for each of the 3 jobs and multiply it by the overhead rate calculated in requirement 1. And then this is simply a total of the 3. And if we wanted to double check it, we could by doing a separate calculation to take, let's see, to take our total machine hours used and multiply it by our rate. And so that's just a check on this calculation here. Okay, so that's 19080. And let's put that in there and let's check it. And we're okay. Okay, requirement 3, compute the balance in the work in process inventory account at the end of the first month. Okay, so let's go back to the Excel spreadsheet, and we can see that for the month, each of our 3 jobs have costs which include direct materials used, direct labor incurred, and overhead applied. So if we take a total for each job, we'll get the total cost for each job and the total for the 3 jobs. I think we need some space here, so we need to open up, I don't know, a couple of rows, maybe 3 rows. So this is our total manufacturing costs. And then we need to consider that Job 101 was completed and sold. Now again, remember this requirement is asking for the balance in work in process at the end of the first month. So what our worksheet shows us is the total costs incurred for the month, 73,180, but job 101 was completed and sold, and so we need to show that our completed jobs were basically taken out of work in process. And I did that wrong. Sum E3 to E5. I need this formula here for jobs that were okay, that works. So our WIP balance at the end of the month then would include only job 103, because jobs 101 and 102 were completed and therefore transferred out of work in progress and into finished goods inventory. So our balance should be 14,920. And so let's put that in the blank there, 14,920. And let's check it. And that's okay. And then we got a couple, let's see, 3 more requirements here. How much gross profit would the company report during the first month of operations before making an adjustment for over or under applied manufacturing overhead? Okay, so if we're going to look at gross profit on jobs, or in this case 1 job sold, then we need to take a look at Let's see. Where should we fit that in? Why don't we put it down here? Job sold. And that was job 101, was sold for 50,200. And the cost for job 101 would have been this amount here, 35,940. And so let's show that as and the difference between the two, and that is before the adjustment for overhead. And so let's get the difference between those two amounts, and the gross profit on the job 101, which was sold during the month, is 14,260. So let's show that in there. And again, let's check it. Go ahead, that's okay. Let's see. Requirement 5A. Determine the balance in the manufacturing overhead account at the end of the first month. The balance in the manufacturing overhead account at the end of the first month. Well, what information do we have on overhead? We don't have overhead. Oh, we do have it. We do have it. I'm sorry, I missed it. We can't determine the balance in the overhead account unless we have actual overhead incurred. And so they're giving that amount to us in the problem. Actual overhead costs recorded during the first month of operations was 18,080. And so if we were to look at the overhead ledger account, and we don't have a ledger here, but let's just calculate it here. We have a debit and a credit and a balance. So our actual overhead would be recorded as a debit in the overhead account, and that amount is given to us as 18,080. And our applied overhead is the amount that we have credited to overhead and moved into production. So that amount is based on our calculation up here, overhead applied. And so the total applied overhead for the month was 19,080. And so manufacturing overhead is an income statement account. It is a cost account. Cost account means that its normal balance is a debit. And so we would take our debit amount and subtract the applied or amount or the credit. And let's see. If we take the debit and subtract the credit, our balance in manufacturing overhead is a negative amount, which means it is a credit amount, which means we have over-applied overhead to production. That means we took out more overhead and moved it into production than we actually incurred for the period. So we are over-applied. And I believe that's what that part of the problem is asking for. Well, it's asking for the balance in the manufacturing overhead account. And so the balance would be a negative 1,000 because it's a credit balance. And again, let's double check it, make sure we're okay. Let's see, why is that not correct? This needs to be checked out. Okay, well, I figured out why that is showing as incorrect, and that is although it's a negative or credit balance in the overhead account, what they want to see in the answer space here is not a negative amount. They just want to see that amount as a positive. So instead of negative 1,000, I'm going to change it to just 1,000. And as you can tell, in the next part of the question, it's asking if that's over or under applied. So that's where we will indicate whether it's a positive or negative amount. And so now, as we can see, it's showing as correct as 1,000. But keeping in mind that that is a negative amount, it's a credit balance in the overhead account. And so, as we showed in the on the Excel spreadsheet, that's over applied, and so the answer to the last part of the question is over applied. And we want to check, and let's see, we're okay, and so I believe that is it. We should be able to submit. And we got 15 out of 15. So we're okay. All right, well, that's problem 3. And I guess the last one that needs to be done is problem 8, and we'll get to that in a few minutes. Thanks for checking this out, and hopefully it'll help you in getting through chapter 2.